Good afternoon, everybody. Welcome to Trader Merlin Show. Hopefully I will have no mistakes, no audio issues, and we'll have a good show today. Hopefully you had a great weekend. As promised, I mentioned on, I think, Friday's show or Thursday's show, there were a couple questions about, are we headed for a recession here in the United States? And I thought, that requires a lot more research and digging than just arbitrarily giving my opinion on what I think the economy is going to look like going forward. So I mentioned I'm going to push that forward to today. So today's show is all about this question right here. Will there be a recession in 2024? For show number, what are you, 956. I may actually get to 1,000 shows this year. I guess I got to plan something special for that one. So what type of things do we need to consider when looking at a recession? Of course, all of you right now maybe have an opinion or a thought about what that recession might look like, what the data points could be. But I want to go and dive just a little bit deeper into it because I think that there is a misconception or a belief system that may not exactly be 100% true about what is a recession and what it might mean to you and me. So let's start off with the very basic definition here. Oops, oh great, I'm already advancing my side. So I said there would be no mistakes today. Well, I guess I already screwed that up, didn't I? All right, let's go to this slide right here. And from this one, I'm going to ask this to come up with a basic question or definition of what is a recession. Now, many people believe that a recession is simply a sustained period of economic decline marked by a decrease in real gross domestic product and an increase in unemployment. Now, I thought, okay, that's kind of a very basic definition there of GDP or of a recession, but okay, a lot of people believe that that is the way that it should be, and that's the answer. Well, if you look at it from 2 consecutive quarters of let me rephrase this. There's 2 different ways to do it. The original guy who came up with the idea of a recession said declining GDP for 2 quarters, not necessarily saying negative. If you look at the more modern definition, the high-level blanket CNBC definition of recession, it's 2 consecutive quarters of negative GDP, meaning we're going down below 0. So I guess the simple place for us to start here is to look at GDP. Now, I did switch the latency on today's show to make it much faster. It won't let me do instant, unfortunately, because of the quality that I'm streaming at. But what I would like you guys to do is, as we go on here, interact with us. Let me know what you guys think on these various points as we get to and make it an open discussion. So here is your first data point to look at, which everyone says this is the metric by which we determine whether we are in a recession, and that is declining GDP. Yeah, Ricardo, by the way, did a lot of homework. You sent... I gotta give a big shout out to you. I feel kind of bad because I already had this whole kind of idea of how I was going to build this show out today. And Ricardo literally sent in a PowerPoint presentation, slide after slide after slide. And, I thought it was great because he outlined a lot of points, a lot of stuff we're going to address here today. So Ricardo, bravo. Thank you very much. You get an A+ for being a student. You're the only one that sent in homework over the weekend. So I appreciate that. And thank you for always participating when asked to. All right. So here's your GDP numbers. And check this one out. If you look at the previous 3 quarters, right? If you look here, you've got this pretty sharp decline. And the old school original definition, which I think was kind of outlaid in 1974. Yeah, I was so old at that point. I remember that. No, I'm kidding. You have this nice little downtrend here, and that by that original definition may constitute a recession. However, now it's changed. We are no longer looking at this type of metric as a definition of recession. But we are seeing some negative behavior here with regards to GDP. We were at 5%, then we're at about 3 point something, and now we're at 1.4. This is not very good. It's not an inviting trend. However, let's look at the bigger picture. I think I did 2 things. First off, I wanted to point back here that we were actually technically, if you go off this 2 consecutive quarters of negative GDP growth, we were technically in a recession in 2022, but that just seems to have got swept under the rug and no one really cares about that anymore. What about long term? Well, here's your long-term picture of GDP. Now, just out of curiosity, I'm curious what you guys think. No Googling this one. Come on, just have some fun. What do you think the average GDP rate for the United States is going back into 1947? Just type in the chat what you guys think. The average U.S. GDP rate going back into 1947, all the way back. I mean, we're talking quite a long time. What do you think that GDP rate is? So if we look at where we're at right now at 1.4, we need something to measure that off of, right? What would be a historical norm? Most of you are under it. Lisa, you're considerably over it. That would be more like China, because China's just been exploding growth-wise. It's actually 3.19 from the numbers that I looked at, and that would look like this right here. There you go. Oh, sorry, it's actually not 3.9, 3.19. I have a typo in there on my screen. It's what I get for rushing to get this stuff done on time today. But 3.19 would be that that GDP number there. I'm not sure why. I'm going to make sure it fits right there. Okay, so 3.19 is the answer that I'm looking for. And there it is. So that said, you could make the argument that this is not very good, that we are actually at a point where it's like, oh, doesn't look great. We're below the historical norms. However, we were above it just 2 quarters ago. So we're certainly getting a lot of fluctuation here with regards to GDP. And that, again, is that the major benchmark that most economists start with is that GDP number. Now, I don't believe that this is a good way to look at it. I think there's no way you can look at one data point and say we are definitively one thing or the other. You must look at other pieces to objectively analyze the data coming in and what it means for our markets and economies going forward. A big Ed says, but the Fed is trying to break things right now. Yeah, well, they've been trying to do that for quite some time. Trying to break it. Okay, so let's go to a more robust definition of GDP and a better way, in my opinion, of analyzing it, and that is going from the NBER's definition. Now, you may be asking yourself, but Merlin, what is the NBER? Well, this is officially the group that can put their name on it, right? The NBER is the National Bureau of Economic Research, and they're the ones who officially can say that the U.S. is in a recession or not. Like, they've been handed that mantle, like, here you go, you get to say that we are officially in a recession. So what do they say? What are they looking at? They say a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale and retail sales. So this is a much better way to look at it. It's much harder, right? Because some of this is very subjective. I mean, if we talk about real income, am I just talking about personal income, or are there other variables and metrics there? That's kind of the challenge, which, this NBER has a lot of flexibility on it, and I'm sure that there's a lot of pressure on them not to declare that we're in a recession. So let's start looking at this data one by one. We just looked at the GDP. I'm going to make a table here of all the different metrics that the NBER is looking at to kind of look at and say, all right, what do we think overall? So I put the metric that's GDP, gross domestic product. I put positive, it's above 0, right? So the good news, we're not negative. I think as soon as we start seeing multiple negative GDP numbers, then the discussion becomes much more real. So until we have 2 consecutive negative quarters of GDP, I don't even think we can have the discussion of it's a recession, period. What is noteworthy, though, is that trend has been sloping down for the past few months or few quarters, and that's not a good sign, right? That's certainly not good. Based off this trend right here, one would lead you to believe that the next month of GDP could, in fact, be negative. So, something to keep your hat on right there is like, all right, well, maybe, but right now it looks okay. So let's look at that table again. I have positive, it's above 0, so certainly good there. The negative is declining over the last, I forgot a T on that one. So I'm going to keep track of how many typing errors I made today, because it's going to be quite a few. I'm sure you're going to enjoy making fun of me for that one. So over the last 2 quarters, we've seen GDP declining. All right, that's easy. Let's move on to the more significant stuff. Income. And again, I'm going in order that the NBER discusses. Now, there's a lot of other measurements of income, but I just pulled the standard, personal income numbers that are disclosed to us every month. What does that look like? Well, here's your personal income numbers. When you look at this, that's not the personal income numbers. Are you kidding me, Merlin? This is what you get for being hasty and really rushing to get everything done very, very quickly. So give me 2 seconds as I fix this, because clearly somebody, my producer, did not bring up the table that I wanted, and I will bring that up for you guys over here. Hold on. There should be an income slide. I called it personal income, was my PI number. And there it is. So here's personal income number 1. So this is your personal income data. I know it's sloppy, not organized, but the good news here from this long-term picture is, look where we're at right now, 0.6. So that 0.6 number tells us that obviously we're above zero, and you can see there's been a lot of volatility and fluctuations above and below zero. So the good news is 2 consecutive months of above zero, but now let's go and take a peek at where we are in the shorter term. All in all, I think you guys would agree, and you guys let me know. What's very upsetting, Margaret? What's very upsetting? I'm not trying to upset anybody here today. If you look at this income numbers here, again, I've got this, I just dragged the images on, so it's kind of sloppy. Let's put it up here so you can see income. These past 2 months have been pretty good, right? We're definitely higher than the norm with regards to personal income. And to me, that's a good thing. That means people are making more money. Now, one thing that I do take away from this chart is how it seems to have a very, almost a seasonal pattern. You guys notice it? It seems like if I go to my cursor here back in 2022, it seems like it starts high and then all of a sudden has 4 bars in a row down. And then it starts high and 4 bars in a row down. Starts high, has 4 bars in a row down. And here we have started high. Maybe we start to see this decline over the next, a couple of months. I don't know. But basically right up front, I'm looking at this thinking to myself, from an income perspective, it's above zero. And we've got slight decline the last few months. So, slight decline the last month. Thanks, Margaret. It's upsetting to me too. I really wanted to have this perfect today. The beauty of doing everything myself. So starting off with these 2 data points, GDP, we could make arguments that both of these have some negative and positive factors to it. The overall piece that I would put more emphasis on is they're both above zero, right? So we're not seeing things to the point of where spending is declining, income is declining and GDP is negative. That would be the real kicker for a recession. But the trend is starting to look a little bit weaker. Okay. How about employment? If we look at this chart right here, I think everyone's going to go, oh man, we got a problem. Right? The magnitude of this looks dramatic because it's gone from these lows back here right around 3.4 in early 2023 to 4.1 at our most recent reading for the unemployment rate. Now, I guess I should write unemployment on here. Gio says, Merlin, but some reports have been updated. Yes, well, these are all done off of updated reports. So this is done as of literally 30 minutes ago when I put this together, Gio. But yeah, they do update. They are going to change these things ever so slightly. And again, I'm in the camp of I don't trust the data, but I have to look at it to look for trends, right? Even though I don't believe that the unemployment number is accurate, I think many people here would agree with me that it's probably higher. Are we really 4.1? Shadow stats, we'll call it like a 6%. I think if we look at the U6 rate, let me real quickly bring this one up for you. We'll do the U3. Bring up the U3, and there's usually a table here where I can get both of them. Here's the table, and I'll share it with you guys so you can see it. There you go. So you look here, let me zoom in just a hair, make it easier for you guys. The U3 rate is what we're told, right? This is what we are told is the number, and that's right now, you can see hard red edge 4.1. The U6 rate is what most people would agree is the actual reading of employment, and that's 7.4%, right? That's a large difference between the U3 and U6, right? It's a total unemployed 7.4%, which I feel is much more accurate. That said, the good news is we have seen that U6 rate slightly increased, but not that dramatically from where the lows were, right? If you look at the U3 back in June of last year, we were at 3.6, and now we're at 4.1. Well, we were at 6.9% back in June and 7.4. It doesn't feel as significant to have gone up 0.5 of a point or half a percent. But there we go. Our unemployment is increasing. Now, the reason I wanted to start like this is this looks really bad, and I think that you're going to start hearing more and more people talking about this, saying, "Hey, this looks really bad. We're starting to see unemployment surge." But again, when we look back historically, there is the historical numbers on unemployment going back into 2005. And of course, I always reference the comments from Ben Bernanke when he said, when we were back here at 10% unemployment in 2010, he said, full employment for us is 5.5%. And there's your 5.5% mark. So in my opinion, as long as we stay below 5.5, the argument for recession can kind of be shelved a little bit as well. But we are seeing a trend to the upside on our unemployment rate. So that's not a good sign. So I'll add unemployment to the equation. The positive, we're well below that 5.5% full employment level. The negative is really the last year to year and a half, we've seen it slowly increase, albeit we're only at 4.1, but that's still not that great. All right, Big Eb does bring some good points here. He says, illegal immigration is throwing unemployment off, in my opinion. It's actually higher. I would agree with you. I would agree with you, but the problem is I don't know how much of an impact that's having. I certainly think it's something that we can't ignore, but what's the actual data? What's the real impact, right? And that I just don't know. So unemployment, I think, will continue to be one of the bigger thorns in the side of the recession debate as we go forward. And again, you guys know I'm in the camp of I believe you're going to see more job displacement over the next year or two because of automation, because of AI, robotics. I think that's going to start to displace a lot of jobs and may skew this data even further. But we're not talking about next year. We're talking about the show today is, will we have a recession in 2024? Okay, so we're not thinking 2025 or 6 or beyond, just by the end of this year. So I got myself a little over 5 months to go on this bad boy. We'll see if that's going to come to fruition. But yes, you are totally right. Dave says, I think what is important is comparing apples to apples, comparing data throughout the years. That's kind of what I'm trying to do. I think that's what you're saying, Dave. I'm definitely trying to compare data through the years and looking at historical numbers. You know, the challenge we have with this, or at least I have as someone who's trying to be objective and not put my opinion in front of me and stumble over that, is I got to look at data, right? The reality is the job market, the employment situation a decade ago is very different than what it is today. I think there's just different employers, you know, there's different businesses and pay is different on those. So yeah, it's not quite apples to apples when I look at unemployment rate now versus 2010. I mean, that's 14 years. Things have changed quite a bit. When I look at the CPI index for inflation, the components of CPI have changed over the last 14, 15, 20 years. So it's hard to get that same reading and feel the same. Plus, markets evolve. We've had actions by central banks. We've had actions by governments. We've had wars. Very difficult to get that exact same feel and reading off of something, but that's all I have to go off of. Tom says 5.5% employment should be an alarm bell and not a good number. I agree. That's what I'm saying. If we stay below 5.5, I think we're good. If we start to pop above that, then it's like, okay, this was supposed to be full employment. We've been doing good staying down there. So out of all of these data points, and we've only done 3 so far. Don't worry, we're going to do more. Right now, my biggest concern is the employment numbers because it's been trending up. And I think that might accelerate here going into the tail end of the year, but I do not believe in any way that we will be above 5.5% on the unemployment rate by December. I don't think there's a chance that that's going to happen, barring some crazy black swan event, which we don't want to think about, right? Okay, next piece of data. What do we got? Industrial production. Oh, this was an interesting one that the NBER put in there. Industrial production. You can follow this report monthly at Forex Factory. It's a monthly report being put out there. Here is our current numbers for industrial production. So this was industrial production. I guess I messed up on our personal income. Damn it, dab nabbit. All right, I'll have to go back and fix that. But industrial production is the number that we've seen above zero. So I'm repeating this, which I thought was for personal income. This is actually industrial production, right? Again, things look okay. Let me make sure I got my graphics right here because I did label them. Make sure I got them all correct here. There's personal income. Okay. So I was slightly off. Here's your personal income numbers, right? So I'm going to have to revisit this. My bad. The personal income numbers is the PI. And that has been relatively constant. It feels slightly lower than normal at 0.2. It really looks to me like historically it's 0.3 or 0.4. So income slightly lower, but that's 1 point of data. And it seems like it bounces back and forth between a higher number, a lower number, higher number, lower. It just bounces every couple of months. So all in all, the fact we're above zero, again, for personal income is great. Then we can look at industrial production, which has been looking rather good over the course of time. So the fact we've got industrial production at 0.6%, I feel comfortable with that. So industrial production, we've had last 2 months, big increases. I would say negative. I don't see any. I don't see any from that chart I just showed you. I wouldn't look at this and say that there's anything really negative here. It's slightly down this last month. Let's see what happens in the next month. Again, none of these will be 1 point data where you can go, aha, recession, right? It's not going to happen. It needs to be a trend, a series of longer term data points. So at this point, Industrial production, I'm fine. I don't think that this is, at this point, anything to be worried about at all. Your next piece is retail sales. Rising unemployment bothers me the most. Yeah, let's get through all of them because there are a couple more factors here that might bother us more. Here we start to see an interesting one as well. Retail sales numbers. Notice that over the past 4 months, we've seen retail sales significantly decline to the point of the expectations were actually negative, and we are right at zero. So for the past 3 months, we've seen almost no increase in retail sales. That is not the end of the world, but just think about it. If you and I, as consumers, are going, I'm going to watch my expenses, I'm not going to go out and buy some more stuff right now because I think that there might be something coming, that impacts businesses, right? And there's this delay. There's, of course, a delay. But if you decide, let's say you have $1,000 a month that you're allocating towards just random expenses of stuff that you want, yet you realize potentially markets could be in trouble here. I'm not going to spend. I'm going to eat dinner at home. I'm not going to go buy this stuff. And you save that $1,000 for yourself. That's better for you as a consumer, but it's not good for businesses. Because remember, that $1,000 would be going towards business profits, which means hiring employees or keeping employees employed. Those employees going out and spending their money. So there's that trickle-down effect that could take 6 months to a year to finally get to that bottom line. So by watching this retail sales number not grow is a little concerning. I'm not going to say, oh man, this is bad. It's slightly concerning because it's not growing in the summer months. I mean, these are months where you think retail sales would be doing pretty good. People traveling and spending money because it's summertime. We're not seeing that. So this is not a good number for me. I actually had the longer term chart here as well, so you can kind of put it into perspective. There isn't really periods where it has just gigantic surges above zero. So the norm for retail sales is definitely oscillating above and below zero here, so no big deal. But we have finally seen it get back to that zero line. The recent downtrend puts it right at zero, if not below zero. So I have that as your negative. Retail sales, the positive I put, it oscillates above and below zero, so there's no real strong trend happening there. All right, what does GS say? GS says, I asked AI about recession possibilities and says 56% by June of 2025. Yeah, maybe GS, but this show today has nothing to do with 2025. Just by the end of this year. Okay. We're almost done. So, in looking at all the pieces from the NBER, remember the NBER is the organization that literally gets to say, okay, America, you're in a recession, right? They'll be the ones to put the stamp on it. They have that power. When I look at these 5 data points here, we've got GDP is above zero. It has been declining, but it's above zero. The income, I got to go back, and the income actually has been relatively steady, but slightly declining the last couple months, so no big deal there. Employment numbers, increasing for the past year plus, right? We still are below that 5.5%, and I agree with Tom. Tom says if we get above that 5.5, that should be an alarm bell, not a good number. Correct. I believe that is the case as well, but we are definitely below that number for now. If we get above 5.5, then I think the discussion will become much more severe as far as we are in a recession. If you look at industrial production, I think industrial production looks fine at this point. Retail sales is trending down. So, based off those 5 pieces of data, we can start to formulate an opinion about what we think is going to happen. And the question is when, right? If I continue to see, let's say our August numbers for retail sales and September numbers for retail sales show negative decline, that'll start to make me more nervous about the upcoming 6 to 9 months because that'll have a trickle-down effect. If I see GDP continue to slow down and potentially go negative in the next few quarters, then I'm also concerned. But right now, I'm not. I think we're okay right now. There's other data out there that is supporting, the economy is okay. It's not progressing as expected, but it's certainly not in dire straits. The biggest one for me is going to be this unemployment number. Margaret echoed that same sentiment. I think that this is the big wild card. But let's look at some other data here as well. I think it'd be remiss if we didn't talk about inflation. So here's inflation going back into 2008. And the reason I went that far back is just to kind of show you the norm. And I didn't draw a horizontal line in here. There should be a line that comes flying in to show you the average, but I just didn't have time to do that type of stuff today. You look at inflation, we're at 0.2, we're pretty much back to just slightly above where we were all the way back from 2008 through 2020. You notice that we were right at this 0.2, we were slightly below 0.2 would be the average. So if I had to draw something in there, it'd be right in between these two points here. So I think that looks great. Inflation looks fine. Granted, I just went to the Habit today and spent $13.89, which is the highest price I've ever paid for a number one combo meal at Habit. Remember, a couple years ago, it was like $8.36. So the prices haven't come down yet. Maybe they're not going up as astronomically quickly as they were before, but inflation appears to have slowed down significantly, and I'm okay with that. Now, let's add that sixth piece of data to the table here. Inflation dropped significantly and still above average. Okay. And the reason I did that is I want to look at this data and see if there's any real concerning trends. Remember, I'm trying to forecast by the end of this year, will we see a recession? So looking for those shorter term trends, there's a couple that are negative. GDP obviously is a negative trend. The unemployment is a negative trend for the market. And retail sales, I would argue, is slowly starting to get negative. So to me, I find those to be the biggest factors on this. Now, let's see. I'm going to do a poll here. And you guys tell me, what other things should we look at? What other pieces of information would you look at to evaluate your hypothesis that we are or are not in a recession by the end of this year, right? What's that criteria for you? Or things you might look like as your warning signs as well? Well, you guys type it in while I write your question for the survey. Will we have a recession in... All right, so I will check in oil consumption, various regions in the USA. I won't send the poll just quite yet because I don't want you guys. I'd like to do it at the very end when we kind of have everything on the table. Because again, I don't have a dog in this fight. I don't really care. Price of gasoline. So we could look at oil prices, and we've seen those be a little bit stubborn. I would say it's been a little bit stubborn recently. Here is crude oil. Let's go and look at CL. Today you had crude oil go exactly where I wanted it to go, directly down to my level. But I've been busy all day. Today's that day. I should have sold some puts on UCO or USO. You guys got some real good things. Yes. Oh, man. So for those listening to the podcast, my viewers that are live, and I would encourage anybody who's listening to the podcast to watch live. You just get to see more graphics and be a part of the community here as they do live chat. Here's some of the other factors that they point out, which is true. I think all very valid. Naum says barrels of oil consumed. Margaret says various regions in the USA. So kind of targeting different areas of the U.S. and seeing if there's slowdowns there. Chio says the price of gasoline, so we'll tie that to crude oil. Big Eb says housing price decline or increase, right, Big Eb? I mean, you want to see, let's see. Dave says a balanced budget. Margaret says debt levels. And Chio says the presidential race. Now, I don't think that the presidential race will, by itself, be anything to do with recession. I don't think that's going to be peaceful. Like, oh, well, so-and-so was elected. Well, here comes a recession. I don't think we're going to see that quite of an impact. However, again, I've gone back to this before. Depending on who wins this election, we can start to build a hypothesis for what their campaign has said about what they're going to do for the economy. I don't know if you guys saw I'll talk about Bitcoin a little bit later on. Did anybody listen to some of the speeches made by Kennedy, by Cynthia Loomis, and by Donald Trump at the Bitcoin conference? Man, if you guys aren't bullish on Bitcoin, I don't know what else is going to make you more bullish on Bitcoin. Anyway, we'll talk about that at the end of the show today, or maybe do a full thing tomorrow. So let's go look at the crude oil price. Obviously, the more that this declines, the better it'll be more of an economic boost. So watching crude oil fall like it has, and again, I did not just draw this triangle in. We've had this drawn in for well over a month now as it's been oscillating back and forth. This yellow box I have right now is that kind of one line for me where it's like, okay, this is a buy point on crude oil. I would be okay buying today. We talked about the level was 75.67 for crude oil, and today we hit a low of 75.35. So we're definitely in that yellow zone. You bounced out of it a little bit. The other stop is going to be this trend line here moving to the upside. So this is a great sign. The lower the crude oil goes, the better it's going to be for the economy and moving things forward. You also have things like the 10-year, which has been in a beautiful downtrend for the past 5-6 months. If this continues, that is also good for the economy. Remember, lower yields will stimulate growth, consumption. That means retail sales will go up, and you'll see more and more positive economic data because of lower yields on that 10-year. It's just the cost of business, cost of capital. And finally, I guess you can look at this dollar index, right? If you look at the dollar index here, where's my cursor? There it is. We've been kind of traversing lower over the past same period of time since April. You do have lower lows and slightly lower highs. So this is not really as pronounced as the 10-year yield drop, but it's still good for the economy. The weaker this dollar gets, the more foreigners can buy of our goods and services, the cheaper commodities can become, and more then commodities will take off. So these are also some other factors I would look at for that longer term picture, at least forecasting by the end of the year. Let's see. I will drop. Okay. What else we got? Yeah, we'll talk. I'll do a specific piece on Bitcoin at the end of this, time permitting. I want to make sure I get through all this because today's topic was going to be this. Hope you heard Michael Saylor said, "Yep." I did hear Saylor as well. All right. So based off of that, I'm going to put this poll out here, and it's just, will we have a recession in 2024? I'll let you guys give your thoughts on it before I put mine out there. There's obviously many different factors driving this. And of course, the data that I showed you is not my data. I didn't create it. It's created by different entities and government agencies. We have to take that at face value. Don't necessarily trust it, but it does give us a little bit of an indication as to what the trends may be for those specific things. Now, many of you, if you wanted to dive in deeper, you could certainly start looking at other metrics, like we looked at the dollar, we looked at the yield and inflation numbers. Those aren't really calculations that are focused on by the NBER, right? This table here is really what the NBER is looking at, and based off of that, I have to put myself in the no. I didn't want to say anything because I don't want to sway anybody's opinions here. It's just an opinion on my part. I don't believe that we'll see one by the end of the year. Several things have to happen, right? That GDP number needs to keep dropping, unemployment numbers need to keep going up is the primary two pieces to say we're in a recession. And remember, right now, the Fed is in a very interesting position because the Fed, our central bank, has yields right now, has the Fed funds rate at 5.5%. If we start to see GDP numbers decline significantly, right, and I mean they go negative, that would be the green light for the Fed to say, okay, we're cutting rates. Right, we're in that debate period right now of, are we going to see rate cuts this year? I know many of you differ on what we're going to see as far as rate cuts. I still am holding on to one rate cut simply from a political perspective for the election. However, if that GDP number comes out next month negative or anywhere close to that, then I'll go 2 rate cuts this year. So here's our Fed funds futures probability. Right now, the expectation is that this Wednesday, you're going to see no change, right? 95.9% chance it stays the same, but that's not when I think it's going to get cut. I think it's going to get cut in September. Right now, there is an 89% chance of a 25 basis point cut in September, a 10% chance of a 50 basis point cut in September, and a 0.3% chance of 75 basis point cut. I'm in agreement with this. I think you're going to see the cut in September. I think you'll see the cut in September, therefore it'll help the markets a little bit going into the election. But right now, if you look at the December 18th FOMC meeting, there is a 53.5% chance of 3 rate cuts by then. Okay, that's interesting. But you got to remember, you look at this and many of you are probably rubbing your hands going, oh man, 3 rate cuts, this market's going to soar. Remember, these numbers can be wildly off. You might remember we did a show last December which showed that by the end of this year, we would see 8 rate cuts, 8. And then all of a sudden we got to March and it's like, 5, right? We got to May, it's like, 3. And then it was like none. And now all of a sudden we're starting to see that pendulum shift the other way. So don't hang on to these data points here, this Fed funds futures, and say that's the answer. Certainly the expectation from the markets is right now we're going to see several cuts this year. 3 is the odds-on favorite right now. Okay, you guys have sent in a whole bunch of different stuff here. So let me see what we got. The Fed is always late, 2025. Big Eb, if you had to say, will we see a recession in 2025? I do think so. I think that these pieces that I just brought up, GDP, income, consumer income, unemployment numbers, industrial production, retail sales, inflation, all of those things look okay. Nothing's robust and amazing right now. And we are starting to see subtle trends form in some of them for the negative. And if those trends continue, then I think that will come to fruition probably sometime next year. Not that a recession is the end of the world. Honestly, I think recessions are great from a trading perspective because it gives you the opportunity to buy things at a much, much cheaper price typically. So embrace. Yep, Mercado 8531 liftoff, right? Let's see. What else do I got here? Let me go to Blue Diesel. Question, does it seem like people who have recently bought a house or a car will also slow things, meaning aren't many house and car poor because they locked in at a higher cost? No, not necessarily. I see what you're saying. So what you're saying is if someone bought a home, let's say in the last 3 months, they're locked in at 7%, and their ability to take part of their income and spend it on other things is diminished significantly. If I understand your question, Blue Diesel, I think that's what you're asking. The answer is yes, right? People who've locked in at a higher mortgage rate, I know we've got some of you here that are locked in at 2.5%. Bravo! You have more disposable income every month than someone who locked in with the same salary at 7%. Absolutely. However, if we see these rates decline, as Big Eb has forecasted here, he believes that 10-year is going to be below 4% by the end of the year. If that's the case, then someone who locked in a 7% 30-year fixed rate mortgage, they may be able to refinance here next year sometime at, let's say, 5.5, or maybe it gets back down to 5, and then that puts them back in a more favorable spending situation. So yes, those who have locked in or are financing their consumption habits at a much higher debt, they're essentially restricting themselves from spending more money on other goods and services that would drive the economy higher. Yes, correct. Okay, great question. Mark, candidates some interesting things. I hope you heard Michael Saley. Yep, I will talk about Bitcoin here in a second. Low growth, but not a recession. I'm with you, Rod. I think that's it. I think it's slow growth. We're crawling at a pace. And this should really be the shocker. This is the part I don't quite understand. How can we have pumped in $17 trillion into our economy and we're crawling with growth, like barely crawling growth-wise? I mean, we should have the greatest GDP numbers this economy has ever seen in the history of mankind because we've never put that much money into the economy. We've never juiced it like we did for COVID. Where did all that money go? Yeah, don't tax the rich, though. Don't tax the rich. Okay, let's see. The Fed is always a recession. Cooking the books until an established candidate in office. Maybe, Oliver. I mean, again, I don't trust it. Tom says, we need to really get going on that recession thingy as we have 1.6 quarters left to get to negative quarters. Yeah. Which is exactly, good point, Tom. We don't have enough time really to have a recession by the end of the year. So here's our poll totals. 91% of you saying no recession by the end of the year. And I think that's the logical. Could things worsen and slow down? Absolutely. But to definitively stamp it as a recession by the end of the year, I just don't think we have enough time. Now, one thing that Ricardo pointed out, and again, thank you for sending in your homework. It's kind of funny to say you had homework, but you did. You did a lot of work on that. There's obviously factors that are outside of our control. And at any moment, a black swan could come along and all of a sudden we're in a recession again, like we were in during COVID. Given the fact that COVID was, 4 years ago now, it's kind of crazy. I think it's that long ago. It just seems like it just happened. It's funny, I've done a bunch of traveling lately, and everywhere I go, like no one's wearing masks anymore. Like 1 out of maybe 5,000 people I see is wearing a mask because they probably have COVID. Guys, remember, like you couldn't even go outside without someone getting on your case or looking at you weird because you didn't have a mask on. It's crazy. Anyway. Tom says, printed money with bad policy, energy policy, immigration policy. Yeah, but the money has to go somewhere, right? You didn't just print $17 trillion and it disappeared. Like it went into pockets of who? In my opinion, it ended up in the pockets of the businesses because we've seen the stock market go absolutely crazy. You look here, let's look at the S&P 500 here just for a minute. Look what's happened to the stock exchange since 2020. This right here, my friends, it's slightly off, but I'm going to go from the bottom here to the peak we just had. There we go. That rally is 162% in 4 years. That is one of the biggest 4-year rallies in the history of financial markets. I mean, if I go back here to a weekly time frame, let's go back to a weekly and go back. Where am I going to find anything that gives me 170%? 167% rally. I can go to these lows here from October 2002. Yeah, we had 105% rally in 260 weeks. But this one has been less time, 224, and it's 162%. So I think businesses are the ones that have reaped the rewards for all this, and I'm sure that some of them were pushing and lobbying to get more funding and spending. But businesses have been the ones that really, I think, reaped the rewards of all this. All right, the money went to the wars. Unfortunately, Oliver, there's probably some truth to that. What else I got? 33 votes, only 14 likes. Come on, thanks, Lisa. Lisa's my cheerleader. I've got to get... You know, one thing I've noticed about these guys that have like 15 million followers is they're always going at the very beginning. They have like a little pre-recorded video they play. It's like, if you like the content you see here today, hit the like button and subscribe so you can see when all my videos come. I guess I just don't do gratuitous self-promotion, so my bad. I should probably make a little... I should start, instead of the TraderMerlin intro, just do a quick little button, 10 seconds that says, hit the like and subscribe. Let's go. Maybe I'll change that as I try to do more for the show. Let's see, what else we got? Lots of corporate stock buybacks in the last 2 to 3 years. Yeah, I mean, why wouldn't they? You know, if you are a business and you look around at the landscape for mergers and acquisitions, you don't see anything really that would better yourself from a strategic position perspective, you manipulate your stock price, which we should do a show on anyway, because share buybacks to me should be to some extent illegal, at least the way that they're done presently, because share buybacks allow companies to manipulate the share price. You're removing you're removing shares from circulation, which you're now literally taking supply out of the equation. And so you can manipulate your share price by just doing a share buyback. And gee, Apple's done a lot of that. Let's see. Geez, I hit the like button. Thank you, Gio. Appreciate that. What else do I got here? And ending up in the pockets of BlackRock, Goldman Sachs, and other financial firms also end up in Vegas versus stimmy checks. And again, you remember when you guys got, some people here got it. I did not get my $1,200 stimulus check, right? I thought it was funny. I saw ads in the newspapers, full page ads for Walmart saying, hey, we've got the new 85-inch LED TVs, $1,200. It's like, people are just going, oh, I got $1,200? Let's put it there. Right? That $1,200 should have gone to paying off your credit card bills. 100% of it, not even a penny elsewhere. Anyway. I'm venting and ranting over here. Rod says a lot of people in businesses became rich. The rest of the world got some too. A little bit. I mean, if you look at your 401ks, your IRAs, we've all done pretty well. Okay, so that's my takeaway, my thoughts, my just quick analysis of this. Will there be a recession? And by the way, I love this graphic. I asked AI to make me. I said, United States in a recession, trouble ahead. And this is the graphic it gave me, like the American flag kind of fractured up. I don't think we need to worry about it. Not for 2024. We'll reevaluate this in 2025. I'll have Larry on. Larry and I always love to do a year-end wrap-up future for the markets going forward. And I think we will probably be leaning on I can't speak for Larry, but maybe leaning on the side of higher probability of a recession in 2024. So there we go. All right. Here we go. So whoever sent that question, thank you very much. I had a couple questions that were posted on the YouTube channel for tomorrow, which I will get to tomorrow. But let me real quickly go over what was said at the Bitcoin conference. Now, I apologize, because I know many of you are rolling your eyes and like, God, Merlin, I'm sick of you talking about Bitcoin. It's not just Bitcoin, it's the potential upgrade of our financial system, right? I can't emphasize that enough. I don't want to pigeonhole myself into just Bitcoin. However, this Bitcoin conference that has been around for years is typically fanatics, right? People trying to share with the world why Bitcoin could do a lot of good. This year is so different because you had Donald Trump, Kennedy, Cynthia Lummis. You had like 3 other senators. You have major CEOs of major financial. I saw the CEO of Cantor Fitzgerald is going to be there, all talking about the potential for Bitcoin. Okay, that's just their opinions, right? My big soapbox has been, we're going to see regulatory change. And why do I think we're going to hit $250,000 per Bitcoin by next November? It's because I believe we're going to see a regime change. And I believe the stance will change because more and more politicians are understanding that if I look at the population, there's more people that are like curious and supportive of Bitcoin than there are haters. The haters just don't understand it. So if you want to get votes, you got to go out there and tell people that you're pro-Bitcoin. I'm sorry, that's the way it is. Even the Democratic Party, who has been clearly against Bitcoin in many statements that they've made, thank you, Elizabeth Warren, they are now asking for some more information about Bitcoin. I saw something, Kamala Harris, reaching out to some of the professionals in the industry like, could you educate me more and talk to me about this? Can you guys imagine if all three candidates, Trump, Kennedy, and Kamala Harris, all were pro-Bitcoin? What do you think is going to happen to the price of Bitcoin after the election? To the moon, Alice, because there's no negative regulatory pressure coming. It's going to be all positive. So here's the crazy one. Donald Trump said, don't sell your Bitcoin. He said Bitcoin's going to moon because he's going to be very favorable. He's going to do the same thing that Kennedy said. Both of them said day number one, they would take the U.S. Marshal Service's position in Bitcoin, which is 244,000 Bitcoin, and move that over to the Treasury as a strategic asset for the United States. That's a good step, but that doesn't really pop the price of Bitcoin. What that means is the government will no longer sell those on the open market, which they were planning to do at some point. Now they will keep that as a strategic reserve, meaning it's now out of circulation. That means more price potentially going to the upside here with Bitcoin. But if you guys saw what Kennedy said, boy, I can't vote on an individual based off of one comment. It's the content of their character overall and their viewpoints on many different things. But oh man, if anybody here is a 1-point voter and it's about crypto, then Kennedy's your vote. I mean, what he said was nuts. And I certainly don't think it would happen. But here's what happened. Yeah, and by the way, Gensler, Trump said he'd fire Gensler. I do believe that Kennedy would do the same thing. I think that there's too much heat on Gensler right now. The Democrats should probably get rid of him as well. It seems crazy. Anyway, here's what Kennedy said about Bitcoin. Day number one, he's going to write over those 244,000 Bitcoin held by the Marshal Service into Treasury. So him and Trump aligned with that. That's good news for anybody into crypto. But what he said after that was mind-boggling. He said, I will direct the Treasury, I'll sign an executive order day one to have the Treasury Department of the United States buy 550 Bitcoin per day, until they get to 4 million Bitcoin. And the reason for that is, in his statement, he said, and I don't know if this is true, but he said that the U.S. has 20% of the gold supply in the world. Therefore, we should have 20% of the Bitcoin supply. Now, for those in this room who understand the mechanics and the math behind it, this is a staggering statistic. Here's why. There are 450 Bitcoin presently made per day. Per day. That's just how the mining algorithm works. Every 10 minutes, there's 3.125 Bitcoin created, times that by an hour, times that by 24 hours. You've got 450 Bitcoin created per day. So what Kennedy is proposing is the Treasury Department will be going to the open market, because you can't buy them from some warehouse. You have to go to the open market and buy 550 Bitcoin per day. That's more than's being created per day. So everybody here should understand, if you have a buyer who's buying more than all that is created for a day, price is going to go up significantly, because just by themselves, they're going to drive price up. Everybody understand that? I mean, if there were no other buyers in the world for Bitcoin and the Treasury Department bought 550, but only 450 were created, they've got to go buy those hundreds from somewhere else. By themselves, they'll drive price up. And then you have people like me who are going to go, I'm buying more because now I have this incredible buyer, and more people around the world are going to be buying Bitcoin to get ahead of that. And that could cause a massive spike in price. To me, that could put Bitcoin over the $1 million mark per Bitcoin, just because of supply and demand. And if the US government does that, I do believe that you're going to have a keep up with the Joneses type of world, and all of a sudden China and Europe are going to go, we should have some Bitcoin reserves as well. And I think corporations will start adding to that. And now you're looking at a valuation. I believe the number that Kennedy threw around was over $20 trillion. $20 trillion? That $20 trillion would, oh man, yeah, I'm looking forward to it. Bring it. Remember, there's only 21 million Bitcoin. Couldn't they just buy it from who? Who are you going to buy it from? Indians wear the most gold. They do. Indian culture is very gold. When they get married, lots of gold is given as gifts. And smart, right? Smart. It's an asset. You have other cultures that do really, really silly things. But I won't go into cultures here because it could get offended people. What about rappers? They have 25% of the gold. Merlin, are you still selling all your crypto in November of 2025? That's a great question, Chio. It really depends on what happens in this election, because I think that's going to be the ultimate determinant of where Bitcoin price goes in the next year. if by some chance Kennedy wins, I will leverage more than I should and buy more Bitcoin, a lot of Bitcoin. Because if he follows through on that action of buying 550 Bitcoin per day till they get to 4 million, remember guys, there are only 2 million left. I'll show you. There's only 2 million Bitcoin left. So hold on one second. I'll show you real quick. Coin market cap. I'll bring this up over here and I will show you. You can click on Bitcoin and you guys see right now, it disappeared. Circulating supply over here on the left-hand side. 19 million, oh, it disappeared. 19,730,000 Bitcoin right now are in circulation. And remember, in the year 2140 is when we will reach 21 million Bitcoin. So basically, he's going to have to buy every single Bitcoin that's created from here on out, plus find another 2 million Bitcoin. That's going to drive prices to the moon. So if by the long shot Kennedy wins, I'm going to buy as much Bitcoin as I can possibly buy. I'm going to probably go nuts on Bitcoin. If Trump wins, I'll keep my position. I'll see if he follows through and says what he said he's going to do, particularly with his VP. You know, I think that there could be some positive things for crypto. So I'll hold it. If the Democrats win, then I will stick to my plan, which is most likely selling next year. But again, not 100%. It really depends. It's going to be market determinant, right? I'm like the Fed. I'm going to be data driven on that one, Chio. Data driven. Marcus, I don't like either party, so as independent winning would be very interesting. It would be, but I mean, what are Kennedy's chances, honestly? It's slim to none. I think when Biden was running, Kennedy stood a chance because I do believe there were a lot of Democrats who are like, I just can't vote for Biden. So dropping out, actually, in my opinion, hurt Kennedy. But again, what's my opinion? It doesn't matter. We're going to have an election. We're all going to vote on it, and may the best individual win. Let's see. Anybody want to bet that Merlin? Oh, please. Yeah, bet me. If I'm happy to lose that bet. That bet could be multi-million dollars for me, Tom. Multi-millions. Rappers wear gold, which are less percentage. They kind of... Yeah, and rappers, I mean, come on. That's just a lesson in stupidity. Rappers, when they're super gold chains. Mr. T, I mean, how much was all that worth? A lot of it probably was fake. Liz says, how often have we heard candidates promise something to win votes only to renege on them? Yep, exactly, Liz. That's why I was saying, you know, if Trump does win the election, then I'll wait and see. I think that Trump would actually do good for Bitcoin because he's smart. Remember, he understands how to use the people. Right now, if he says you're going to do something for Bitcoin, you're going to get all these Bitcoin votes. So right now, the clear leader in the crypto digital asset world, out of the three candidates, Kennedy. I would say that almost everybody in crypto would say, I'm voting Kennedy. But now Trump has jumped on and said, hey, I'm pro-Bitcoin too. So you're going to get part of that voting base fragmented now. Now we'll see if Kamala does something similar as well and change the Democrat stance on cryptocurrencies and digital assets. It would surprise me if they did not. I think that they're seeing kind of a significant turn in the United States as far as people's interest in crypto and digital assets. We're realizing it's not used for drug dealers and terrorists, that there is some applications for it, and it does have some value. So why wouldn't I want to have that as part of the U.S. economy? And when we get closer, the talk track, if the Democrats don't change, you'll hear certainly Trump bashing the Democrats for taking jobs out of America with their anti-crypto policy. And he'll use that to try to win more votes. So it's this really interesting chess game going on between Kennedy and Kamala and Trump. I hate politics. I think it's all garbage. It's embarrassing to me, but it's a fact we all have to live through, and we'll have to, it'll be resolved in November, and we'll see where those chips fall. But Chio, the plan right now is to sell in 2025, but there's no guarantee of that. And of course, I'm transparent with you, so I'll be letting you know what I'm doing with my crypto at one moment in time. But man, I mean, based off one issue, if I had to bet just one issue, it would be Kennedy all day because that would drive the price of Bitcoin over $1 million. Now, again, I got a lot of other things to consider when I vote for these candidates, so we'll leave it at that. All right. So will Costco sell Bitcoin soon? No. Costco will not sell Bitcoin because you know what? No, they won't, because it would be so easy to steal the Bitcoin. So easy for an employee to steal that Bitcoin. Imagine if the Bitcoin came... Because remember, the way you get Bitcoin is a public address and a private key. I had one around here somewhere. I had a paper wallet here somewhere. I don't know where it went. Oh, here it is. Basically, if Costco was to sell, you would get something like this, right? Little piece of paper, public address, private key, and that's all it would be. All an employee at Costco would have to do is go in there after hours. The cleaning guy could go to the rack, razor bladed open, take a picture of the private key, take every piece of Bitcoin that's sitting there, and just reseal it back up and call it a day. Easy. Gone. So no, they will not be selling Bitcoin at Costco, and that's funny. All right, I went way overdue. I didn't even talk about our markets today. I will spend much more time on that. I did sell puts today on CrowdStrike. I just the premium was too good. I'll make about 1.25% for the week. I'll show you that one. So here's CrowdStrike. I sold the 152.50, so it's a little closer than I wanted to, which is probably going to be. I'll probably get executed on that, and I'm kind of happy about that. I think CrowdStrike's going to rebound significantly. So they were at 158 on the close. Now you're at 147. They dropped 4% after hours, so we're down here at 1. And I'll put my level on here. The 152, or sorry, 252s. Put that on there. 252. Let's see, 252.5. There you go. All right, so that'll end up being my strike. We'll see what happens by Friday if I get those ones. All in all, today you did have some pretty good moves in the in crude oil. Right, crude oil coming right back down to that one. I will have some time tomorrow morning. I got a couple of calls I got to make and meetings I need to be in the morning, but we'll see if I can get those some time to go in there and look at some crude oil potential purchases for me because it was down 1.75 today into a demand zone. I love it. I like that one. NASDAQ was your biggest performer, 0.18%, but technically when you look at these markets, I don't see a lot of really interesting pieces other than the dollar index and its little surge today. S&P, kind of a hesitation candle. You had gold today, wide range, but almost unchanged on the day, down 0.13. Really more about Russell. So here, the Russell topping out as well. So there we go. What else do I got here? I'm not gonna do a 1 hour show. So Michael, you can't email me. You want to know about Heli earnings, which never see this company under 110? Well, I'm pretty sure we can see it under 110. Helen of Troy. You said you can never see the company under 110? Looks like it's been under 110 a lot. And you go, historically, this is significant lows for Helen of Troy. I don't know Helen of Troy. I don't really follow them. I just love the name. But pattern-wise, this thing's falling off a cliff. You know, is there a spot where it might come into? Certainly the $53, $54 mark looks pretty good here. But, yeah, I wouldn't catch that falling knife. You're trying to catch something that's almost in a free fall, my friend. Why? Wait for it to stop and move up. Trying to catch a falling knife will leave you with sliced fingers and serious injuries. Tom says, my gut and AI tells me crypto is not a top 20 issue. Personally, I'm a 4-year cycle crypto guy. Politics doesn't affect it. I'm with you at this point on that, Tom. But when you have an external event, and let's say Kennedy wins and he buys that much Bitcoin, you're disrupting that cycle, right? Patterns work until they don't. Everything works until it doesn't. All right, that's it for me, everybody. Hope you enjoyed this recession talk today. I know it's very different. We didn't really get deep into the markets, but that's fine. We'll cover that on tomorrow's show. If you got something you want me to cover, it's my last show for a week, Tuesday, tomorrow. If you want me to cover something, email me at TraderMerlin@gmail.com. Let me know what you want me to discuss on tomorrow's show. I already have a couple questions that came in on the YouTube page that I will answer. Type in any questions on the YouTube channel as well, and I'll get to all those on tomorrow's show. And then I'm off to Ireland. So thank you guys so much. Hope you enjoyed it. Hope you learned something. I will see you all mañana. Take care.